Greetings, Dr. Jeffrey Scott, and this is my Market MRI Pro update for February 25th, 2025. If you're looking for the wealth charts video, it'll be up at stocksanddocs.com around 8:30 in the morning on Wednesday. Wednesday is a big day. Now, Tuesday, we started lower, moved a little higher from midday on, with only the Dow or the major moving averages finishing higher. A little bit of bottoming tails. Maybe we're getting close. And oh yeah, we got that NVDA earnings report on deck after hours, I think about 4:25. NVIDIA is important. It's a major component of many indexes. And if it misses, and I protected my position about a week ago, I bought puts on my position and sold some out of the money calls. It will bring down the rest of the market. Maybe that's the one last switch to the downside before we start to recover. If it beats and raises and Wall Street likes what it hears, that could be the beginning of a nice little rally. So big day. And then, oh yeah, Friday, we got the PCE complex, which we know the Fed likes a lot. As always, this is for educational purposes only. Anything I talk about should be taken in the spirit of education, not investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You are solely responsible for any decisions you make. I may own, intend to buy, sell, short any stock mentioned in this report, and trading stocks and options should be considered risky, and you should consult with your financial advisors before making trades. I have tools for multiple platforms, but I'm an independent trader. Join my Google group, Top Down Trader. If you like this video and you're watching for the first time on YouTube, hit the subscribe, hit the alarm, and you'll get notified when I put these up. If you like this, give me a thumbs up. You got comments, put it in the remarks section. If you want to get a little bit closer, why don't you join my Google group? It's called Top Down Trader. I charge nothing for that group. I don't anticipate charging anything. I use it as a vehicle for distributing content. You'll get videos most evenings. You'll get my market commentary. You'll also get invited to events. You'll get a coupon for my upcoming Market MRI Pro. And if you ask, I'll send you a link to a recent 3.5-hour training session I did on how I trade the markets. Go to Google Groups, sign in with your Google ID, look for Top Down Trader, let me know how you want to be notified, and I'll let you in the next day. One of the things that I do in the Google Group is I taught them about the Leaders Index, which is a artificial index built of the leaders in the market. And I built this on November 24th, right before Thanksgiving, with the concept that when this breaks down, then the market's done. And, you know, we got teased, but we were living around the 50, ran to new highs. And I guess this is a false breakout because we broke down. We actually touched the 100-day moving average. I think I'm going to bury this. I think this is done, and I think it tells me this market's probably going lower. Maybe NVIDIA gets us a little pop, but I just don't feel good about the market, especially with the Leaders Index breaking down. If we go into my trading app, and will come out of beta version, most likely on Saturday, we'll do a video. I'll invite the Top Down Trader folks to a live webinar, launch party, and some special pricing, and then we'll release it to the first group of actual purchasers. Pretty exciting day. Never released a software platform before. I've sold indicators, and selling a platform is very different. So this is Market MRI Pro, and it is starting up. All right, so I built a full-fledged platform, I came up with the ideas, and Praveen did all the work. And it basically allows me to do a top-down analysis and a bottoms-up in a relatively short period of time. And over the next couple of months, we'll build in a full suite of additional indicators and tools. But the intent was to build something that allows me to get my work done quickly and effectively. So let's start with my timing model. And interesting things happen in the weekly model this week is the red bars here, the red-green is the buy-sell. So we're in a weekly sell on the spiders and a weekly sell on the Russell. It doesn't close until the Friday close, but we signaled the potential sell signal in the Qs. more reason to be concerned about where this market is going. With the NVDA earnings and the PCE, really all bets are off. So to me, I've raised cash. I have no margin. I'm mostly long, but I've got smaller positions. And I keep having less positions every day that this market continues in the fund. Building up cash for when the market changes is not a bad thing. If I look at the daily signals, you could see that we have broken hard through the WMA on each of the indexes, and each of the dailies are in a sell. So 2.5 to 3 weekly sell versus 4 out of 4 daily sell. It is very difficult to be bullish this market. If I look at the U.S. indices, ETFs, and we'll look at each of these one at a time. So let's open this up. Here is the spiders. So the spiders have had a beautiful run up. What a gorgeous run starting in November of 23. Now, reality, it started running up a year earlier. But big pullback here, the market reversed, and we've had a major run. Problem is what's going to happen next. So we have broken down below the 50 and the 17. Yesterday I talked about new highs as one scenario, sort of chopping around in here as a second, and falling hard maybe down to this 200 as the third. We put this white line in here because this is an area that had been support and resistance several times on the way up. And if you give it another 5 days, you'll probably have the 200 there. So that was my downside, which is 576, and we are currently at 594. That's not even 4%, so that's certainly possible. All right, so I'm not real bullish on this pattern here. On the session, you could see it was down 0.49%. I gotta make that a little brighter. Let's see. I have to add that F. All right, so it's down 0.49%. Is it broken down? Well, it's broken down compared to where it was, and it's below the 50, but it's not that far off the high. If we look at the next one, which is the Qs, let's blow this puppy up, also has broken down, and I think this is kind of an area here. Let's put a horizontal line there. It's kind of an area that I see it was resistance, support, support, and again, you give yourself 3 or 4 candles, will the 200 meet you there? So to me, 500 on the dot, which is only about less than 3%, is my next target. Could it bounce here and go higher? Absolutely. But I don't think it's going to do much on Wednesday until we get the NVDA earnings. But this is broken down. Hopefully it's going to bounce. What about the diamonds? The diamonds don't look nearly as bad, and they're still milling around the 50, but they're below the 50 on Friday, and both Monday and Tuesday they failed to retake it. To me, that's a bearish signal. Does it look better than the others? Sure it does. Where's my target? Probably in the 419, 420 range. And again, that's less than 4%. I don't think that's out of question, and I don't think it's the end of the world if that happens. What about the Russell? Russell's been the weak sister, unlike the others that we're talking about, the 50. And look how this 50 was like a wet blanket. The Russell had multiple failures at the 50. And look at over here, it was nice support. And it's now broken below the 200. This one is the weakest. Hard to get anything excited there. Now, this is VIX futures. In my wealth charts video, I think I used the UVXY. And one of the questions I asked in that video, or I should ask, is why isn't the VIX higher? Well, the volatility has moved up. It was up another just under 2.5% in the market on Tuesday. This is what happens when the market gets a big collapse and then reverses. And when the VIX is high, it's time to buy. We've taken out the recent highs, but it's really not that high yet. but it's moving, so maybe we're going to get to the point where it's more meaningful. Now, the other thing I like to look at here is the dollar, and we could look at dollar futures, we could look at the ETF, and I like the ETF here, but both the ETF and the dollar futures have pulled back into the 200, which should be good for the U.S. stock market. If I go and I do that and I look at commodities, it was interesting with the dollar really not doing much. You're going to see that gold and silver were actually down a little bit in the market. Eventually, you can see gold pulling back to the 17, silver in between the 17 and 50, silver down 1.5%, gold down about a 1.32%. Oil broke down below the 200, down 2.4%. Natural gas continues a nice move. After a little consolidation here, had an update. And then if you want to look for some good news, if you're long the market, both the 10-year was down 2% and the 30-year was down just under 2%. My bucket analysis is something that I really like to look at, and it gives me a sense of where the stocks are within the Bollinger Bands. And I look for patterns like this where we're starting to build up more and more stocks below the lower Bollinger Bands. Now you could see the 1 day means yesterday, and today is the second one, that we actually eased a little bit of this pressure on everything but the NASDAQ, which is still a little bit more oversold. These are levels that we start to think about reversals in. Doesn't mean it's going to reverse, but it tells me that we're probably getting very close. Market breadth gives me a sense of some of the AD lines, new high, new lows, up, down volume, and those are down here, and you can see they're red on each, the NYSE and the NASDAQ. I look at these signals down here, but there's no new ones. These are stocks above the 17 in green, the 200 in red, the 50 in white. And when we get oversold that we're going to bounce, it typically pulls back like this. No guarantee it's going to bounce or have to pull that far back, but typically that's a nice signal. You could see the NYSE is still tracking above the 50, sort of a broader market look, while the NASDAQ has broken below the 50, a little bit weaker looking. The ratio charts give me a sense of which sectors are leading, and as we saw in yesterday's report, XLP, XLV, real estate, even utilities are showing some strength. Communications remain strong. Financials are okay, as is energy, but the big move has come in consumer staples. The daily brief gives me a quick look at what the market did in the last session, and we could see that the only two of the ETFs that were up were the VIX up 0.98, Diamonds 0.37, and the others were down from 0.38, Russell 0.5, Spider, and 1.26 down on the Qs. Over here we could see that for the most part, only the Diamonds finished in the upper part of their range. Over here we could see expansion, if you've been watching this, the new highs minus new lows, expansion of the new lows in the NASDAQ, still new lows in the NYSE, but not nearly as much. If we come down here and we look at 1 day performance at the S&P 500 sector level, staples, real estate, healthcare are all defensive plays, utilities is further down. If we look at what categories were working, home construction, which is interesting because this was down, renewable energy, China, Norway, aerospace, defense, preferred ETFs. Now the last place I go to is my layout, and this is set up for my signals. The high-low jump, which is this line up here, is a overbought, oversold oscillator. When it's above 95 or below minus 95, I'm careful. It's okay right here. Candle charts with 200 in red, 50 in white, and 17 simple in green. Regular volume. Down here are what I call my dot indicators. The first one is a trading system called the EMS, which in this chart went from buy to short in the market on Tuesday. The second thing is called my CPR signal, which is a unique crossover system which finds trades early. And then there's a series of 4 dots. You can see 4 of them here. Gap, volume, breakout, momentum. Beneath that is the squeeze. The dots after the squeeze reflect expansion of the range and coming out of the squeeze. The PSAR, just a standard PSAR looking for reversals. And then I'm looking at relative strength of the stock versus the spider versus its moving average, and OBV versus its moving average. So I can look from a top down, or a bottoms up. So let's start with the top down. And I have built out, so you have 11 sectors. And if you rank them by percentage change, perhaps, you could see real estate, industrials, basic materials, here's your staples, financial services, and interestingly, discretionary. I like to rank by 2-day momentum, real estate, staples, materials come up to the top. Over here is a long list of, exhaustive list of industries, and I've got them ranked from worst to best, and I might rank them by change, or I might rank them by the same short-term momentum. So now I've ranked the stocks, the sectors by momentum and the stocks. So sometimes I'll sit here and let's just look at the top three. 1, 2, 3. Whoops. Come on. All right, and then the third one here. There you go. So those top three, that's actually 2. Let's get the Now we'll stick with the top 2. I don't know why I'm not getting that staple. I bet if I turn the program on and off, but I don't want to do that. So switch to impulse, go back to top down, and let's look at real estate, which is 194 stocks. Staples takes it up to 328, and in healthcare takes it up to 1,008. Let's rank by that same 2-day momentum. Let's just look. Now, I talked about this one yesterday, and look at this. This is probably my pick of the night, although it was my pick of the 10:30 in the morning, because McKesson, which is, if you look at it on a weekly chart, is just an amazing performer. Don't you want your portfolio to look like that? Yes, this was painful. It performs best in difficult markets. You can see the monthly, also incredible. It does well in difficult markets. These are, Cencora and Cardinal Health, its big competitors, are operating machines. I drew this line yesterday and said if it breaks out, I'm going to be interested. And we had, out of a squeeze, we had volume, breakout, momentum. We had 2 momentum signals in a row, relative strength, breaking out OBV. McKesson's probably one of my favorite stocks up here, although it ran a lot in the session. Lilly, the makers of one of the diet drugs, we've been talking about this for several days. Looks like it's ready to break out. I like that. SOLV, I don't know them. Sideways move and a breakout. You can look up here and maybe learn something about it. Earnings are due in February 27th. And we don't have a comparator because it's an IPO. I don't know anything about this. You can do research. The pattern looks great. Run up, big base, and a big breakout today. Elevance is one of the big commercial insurers. Big pullback. Now, this is a bottom fishing play. It's fallen hard. It's going to get resistance here, but that's 15, 18% away. It had a big move up off the 50 with volume, breakout momentum, with relative strength and OBV peaking up. It's not beautiful. It's not an uptrend, but it's a great company at a lower price. Molina Healthcare, not yet. AMT, big dividend payer, doesn't do well in recession. So far, it hasn't broken out yet. Cigna, HCA, and one that I don't understand is Costco. I love the store. Love the store. Let me say that again. I love the store. Here's what I don't love. Look at its forward PE, 333. Look at its growth rate. It's slowing down, both earnings and revenue. I think this is wildly overpriced, and I'm afraid to chase it, which means it's probably going to go up and double from here. So one way of being a top-down investor is to sit here and go through the leading stocks in the top sectors. Another thing you could have done is pick the top 10, 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. I don't buy tobacco stocks. I'm a cancer doc by training, and maybe that's stupid, but it's just I have to have some principles. And what comes up to the top, the same group of stocks, because it's heavily healthcare, are in the leading industry groups. And there it is number one again is McKesson and Lilly. So those are things that I might be looking at tomorrow. Obviously, I'm going to be very careful tomorrow because of the NVDA earnings. And then that will drive Thursday, and then Friday we got the PCE. So that's bottoms or top down. Bottoms up is more fun. I can take a big list and I could drop down some filters and say I want stocks greater than $5, volume greater than 500, and my 3,461 universe will change to about 1,900 and change. It should change. Let's see. Let me try that again. Pick price greater than 5. Volume greater than 500. There you go, 1,984. And my favorite signal, time tested, is 2-day momentum. And these are the stocks that are my go-to. And let's just look at these AFL. Come on, program. Beautiful. AFLAC. Run up, pull back to the 200, broke above the 50 and the 17. Notice down here, volume and a breakout. PSER reversal, relative strength breaking out, OBV breaking out, not extended. I like this one. Let's add this to my hot list. Aries, another REIT. I don't like buying things that are down like that. Probably a good time to buy it, it's just not my style. Chubb, insurance, they sold off, broke above the 200. I like AFL better. Church and Dwight, a lot of things in your bathroom cabinet are from them. This one had a nice breakout here, similar to McKesson, that it took out the prior highs. That one looks interesting. And down here, you notice you got all those blue dots coming out of a squeeze with relative strength and OBV. Let's just look at their fundamentals. Next earnings are May. 18% grower. What's the PE? Still pretty high. And I thought that. So I'm a little nervous there. No, I don't care about PE, but I like it to be within twice the growth rate. Another insurance company, Cincinnati Financial, pulled back to the 200, a lot like Aflac. Dole Bananas, boring consumer staple. Equity Lifestyle, another REIT. FCPT, Four Corner Property Trust. I like this one, pull back in a breakout here. Now I'd probably, because it's just what I like to do, start connecting some tops here and wait for it to break out there before I get excited. HIG, Hartford Insurance Group. I love this move and a breakout off of the moving averages, coming out of a squeeze with great relative strength. There's our friend McKesson, the two blue dots in a row, like that. Maybe ran too much today. NSA is one of the storage places. This one, I don't know anything about it. I do like the base and the breakout. SOLV. So I would definitely do some research before. SPNT, Cirrus Point, Financial Services. These are interesting. Pulled back to the 200 has been an area to be looking at buying off of it before. Travelers, another insurance company. This one looks very interesting. Add it to my hot list. Vodafone Communications. I don't like buying things that are like that. I want it to be going up. And then VRE is a Veris Residential. I think I picked a few stocks that I liked here, and probably Aflac was one of my favorites on the insurers. Church and Dwight looks interesting here, but it's got a big PE. And McKesson. So it's been 25 minutes. I have looked at the market. I have looked at a timing model to give us a clue as to be long or short. I looked at the ratio charts. I looked at the daily brief. I looked at the buckets to give us a sense of what's working, what's not working. Then I went and did a top-down review, looked at the leading industry groups and sectors. And then I flipped it, did a bottoms up, and came up with a list of stocks. I probably didn't put them all in the hot list, but I'll be looking, because I didn't miss McKesson, so let's go back here and put McKesson in. Then I've got myself a little watch list for tomorrow. Aflac, Hartford Insurance Group, Solventum Corporation, which I want to do some research on, Travelers Corp, and McKesson. Have an awesome day in the market, and give me remarks. This is a new thing for me to be doing daily videos. I started it to support my top-down trader group. I'm going to keep doing it and putting them on YouTube until I have enough people that I'm happy in my top-down trader group, and then I'll be gone forever. So think about joining. Let me know what you think about the videos, and more to follow about the Saturday launch of Market MRI Pro.